Hey, this is Chris Franco, and you are listening to Compound Money Quietly, the CMQ Investing Podcast. CMQ investors, welcome to this show. It's great to have you here. What you're about to listen to is from a Q&A session that just happened on Instagram Live. If you don't already follow the Charlie Munger Quotes page on Instagram, that's where that stuff happens. In this Q&A, we cover a lot of ground. There's a wide range of topics discussed. Let's get to it. Ratas NYC says, please explain what and how Munger and Berkshire are not active and that Berkshire's Geico unit uses derivatives all day and night. Well, when I talk about Charlie Munger, I'm talking about Charlie Munger. So and I'm saying this politely, this is not, Berkshire Hathaway, fanboy quotes page. It's Charlie Munger quotes. So if I post something, I'm referring to Charlie Munger as an individual. Now, when I reference Berkshire Hathaway, I will reference Berkshire Hathaway because there's obviously, a strong, they're attached at the hip. I mean, Charlie is vice chairman of Berkshire Hathaway. It is not that Warren Buffett, I'll go to Warren Buffett though. And again, I'm not referring to Warren Buffett when I speak on this page, but Warren Buffett is not he's not the same kind of investor as Charlie Munger. They are great together, but Charlie Munger and Warren Buffett are not identical in their approaches. And I would suggest that you read The Super Investors of Graham and Doddsville, which was and I could have my dates wrong here, but I believe it was in the Columbia University magazine. It was a reprint of a speech that Warren Buffett gave as a rebuttal to the efficient market theory. And he describes, I believe, 9 different investors who applied the Benjamin Graham value investing approach and how they all were able to beat the market. And even though they didn't have the same exact approach in terms of what they bought, what they purchased, the underlying idea of trying to get, more value for relative to the price you pay, that approach, was what they had in common. And so his point is to say that it can't be pure randomness, that all of these investors who come from this same general school were able to do better than the average, or do better than the market, I should say. So in that speech, and I know this because I did an episode about it that didn't make, sometimes I'll record episodes that don't make the final cut. They don't meet my standards, or I just don't think they're entertaining enough. But in that speech, he talks about Charlie Munger, and he mentions that Charlie Munger, let me read you what he says, but he basically says that Charlie has a very unique approach compared to the other 9 investors. And so it goes to my point here that they're not the same. They're great as a tandem, but I don't want to say that, if we talk about Charlie Munger, we're not saying that what Charlie Munger does is what Warren Buffett does, because it's just not. Okay, here we go. He says that incidentally, this record, and he's referring to this track record of someone whose investment partnership beat the market for a long period of time. He says, incidentally, this record belongs to Charlie Munger, my partner for a long time in the operation of Berkshire Hathaway. When he ran his partnership, his portfolio holdings were almost completely different from mine and the other fellows mentioned earlier. So that's what I would say in response to that. What Berkshire Hathaway does, remember that Berkshire Hathaway is not an individual investor like you and I. Remember that what determines the kinds of moves we make is very different than what Berkshire Hathaway would do, and certainly what you would do differently if you were running an insurance business. I've heard Buffett talk. Buffett is not a fan of derivatives for the way the derivatives have been used and just basically made so accessible for the individual investor. He thinks they're very dangerous, and I think that history will show that he was correct in that assessment. But he's also said that if he sees an opportunity to make money, he's going to go for it. But generally speaking, for the individual investor, I can't find any evidence that suggests otherwise, and I look for disconfirming evidence. So let me just keep moving on, but I hope that answers your question, and I hope you see the kind of thoroughness that I'm trying to bring to the table here. These are not things I'm just spouting off. Pollyanni says, what is your advice to anyone curious in investing? It's a great question, just because I don't get that question a lot. I think if you're curious, follow your curiosity. What I would say, what's helped me teach myself things that I didn't think I'd be able to learn as quickly is learn the history of it. And it doesn't take a long time. Just know kind of where it all started. Learn the first principles, learn the big ideas that apply to that field. One example would be in investing, understand really what it means to say that a stock is a piece of a business. Know what that means. Be able to say why. Don't just be able to rattle that back. A lot of people will say that, but they don't really know what that means. I'd also say, read things that are interesting to you. Don't worry if you open up The Intelligent Investor and you're like, this is boring. Don't force yourself to keep reading it. Find a book that's maybe a little less technically just involved and read that. I know that's kind of some things I would have done differently. I think I ended up finding these paths myself, but if I could have given myself some guidance, I'd say, you don't have to read The Intelligent Investor cover to cover to be, to keep this learning process going. And then I'd also say to learn by doing. The best way to learn things is to learn through different mediums. So, read, listen to YouTube videos or watch a YouTube video, draw a picture if you have to, do things that stimulate all your senses, because then your brain learns better that way. And lastly, you don't want to learn just to learn, you want to learn to retain. And the best way to retain information, or one of the best ways, is to retrieve that information. So I think one of the ways, you could do that for yourself is, you could have force yourself to explain, some of these concepts. Have yourself, write them down, or explain. There's a good technique. I think they call it the Feynman method, where you have to explain something like you're explaining it to a 5-year-old. And lastly, and I know I mentioned this a second ago, but, invest. Don't put more money in than you're comfortable doing. Prepare, especially if you're brand new, be very cautious here, but, just get a sense and a feel for it, where you have money in the market, watch it. Hopefully you won't feel the urge to do a lot of active trading, but, get a feel for what it is you're actually doing, which is investing. Understand that the markets, can move in very irrational ways in the short term. I know for me, I've kept a long log of just my own, almost like a journal of my investing decisions. And that's been really useful too, to go back and see, what my thought process was when I made a certain purchase, maybe in 2017. I still do that to this day. So that's another little trick that's helped me a lot. Okay, Jay Knoll says, and by the way, I can't see the comments now, so if you have questions or follow-up questions, just put them in this queue and I'm going to answer all of them. Jay Knoll says, also, by the way, I'm hunched over. My dog is in my lap and I can't scoot in all the way. What are your thoughts on payment for order flow? That comes from Jay Knoll. I don't think it's, unethical per se, because it's just a thing that exists. My real gripe with payment for order flow, and specifically with Robinhood, is just how disingenuous they are about explaining what that really means. I don't think that there's an issue with, if you're doing something that's legal and it's a standard practice, just come out and say what you're doing. I think most people, and this is me speaking from a consumer marketing perspective, transparency goes a long way. If you're just honest about what it is you do and why you do it, it doesn't mean everyone's going to love it and appreciate it, but they can at least respect the fact that you're honest about it. And that's something that I would recommend anyone in any sort of business, in any sort of issue like related to how you're making money, or even just dealing with some sort of communication crisis. Just be honest. It goes a long way. I mean, everyone makes mistakes, and payment for order flow, I'm not saying that's a mistake. It's just a way that people make money. If I were Robinhood, if I were in the inside there back when they were figuring this stuff out, I'd say, look, guys, we just need to explain that, look, this is a business. We have to make money. This seems to make the most sense for our business. Yes, you might not get the absolute best price, but we're going to make it up to you, or at least try to make it up in some way, in the sense that we're not going to charge you commissions. The issue that they have to figure out, and I don't know the answer to this, by the way, but just the front running and how that could potentially be causing, the quote unquote Wall Street to be able to, trade and make moves at the expense of retail. So that I don't have an answer to, but just speaking purely from payment for order flow, I'm not a fan of it, but I don't think that it's something that, should make a business have to, not exist. I think you just need to be open and honest about it. If you want to learn more on my thoughts of this, there's 3 episodes about Robinhood of the podcast. One's called Charlie Munger vs. Robinhood. One's called Charlie Munger vs. Robinhood Round 2. And then one's called, and this isn't the exact name, but it's like Robinhood, is it a hot stock or future flop? And in the first one, I first learned about payment for order flow actually through CMQ. It was through Charlie Munger's comments, and I just went down this rabbit hole. So I definitely have lots of thoughts about that, and I'd be curious to hear your thoughts after you listen. Kramer_JS says, "What's up with the mustache?" I don't know. People like it, so I like it, and it might be a little a little unkept right now because I was traveling all day yesterday, and I just have been on the move today, so I haven't done my my facial hair routine today. But yeah, I think it's what we'll do. We'll start selling merch where I sell orange mustaches that you can put over like a fake orange mustache. That'll be the merch. Dr. Jose Correa Jr. says, what do you think of Brazil investment in market? This is a good example, learning from Charlie Munger, just acknowledging when you don't know something. I don't know anything about it. Doesn't mean that there's not an opportunity or that it's not interesting. I don't know anything about it. And if there's something you think I should know or that I should read, feel free to send it to me, and I will definitely try to make the effort to do that. Okay, Carly Rod says, who are the sellers and buyers in Alibaba's recent move? I don't have any way to not to understand. I don't have any way to know that. I would imagine, and this is just total guess, I would imagine it's a few things. It's just the short-term, kind of like fear trading where people see, like not the best news, and so we should sell. I think there's also, probably some of the institutional investors where they have the short-term objectives based on what their clients are expecting, so they might sell it off, and that could have an impact. But I don't know. I think it's important to. This is just a thought, but it's important to buy and sell things based on why you think you should do it versus what everyone else is doing. So independent thinking, that's something that I find is a pattern or a theme that all the great investors talk about, which is the importance of thinking independently. So I'd love to know who is buying and selling, but at the same time, it's not the first thing I'm trying to figure out. I'm trying to figure out, is this still a good business that I want to hold long term? Okay, startup.ca, who is becoming a dear friend, said, hey, what's your opinion on REITs in today's inflationary environment and also market correction predictions? So I've talked about REITs before. I don't own any REITs. I own real estate, but it's not. I'm not a real estate expert by any stretch, so I don't have any opinion on REITs. I think you have to assess those individually. So I think it'd be a little bit dangerous for me to say overall, they're good or bad or average. So I don't have an opinion regarding market correction predictions. As much as I'd love to be able to be one of these people who just makes predictions and gets like headlines for that, I think it's just dishonest. No one knows what the market's going to do. If they did, they would act on it, and they would be, they'd be trillionaires. By the way, my dog is now asleep in my lap, so you might hear him snoring in a second. I think in terms of the market correction, though, and how I want to answer, so that's the answers to your questions, but let me try to give you some additional value here. I just don't over fret that stuff. I think when you're long-term oriented, and mind you, this is easier said than done, but if you're long-term oriented, then you shouldn't have to just prepare for a correction. Just know that could happen, but know that hopefully whatever you're buying, you're willing to hold for 10, 20, 30 years. So while you might have some short-term paper losses, and they're not even losses, they're just unrealized losses. Is that a thing? Unrealized gains, unrealized losses? I don't know. But that's just the nature of investing long-term. That's just, that's the dues you have to pay to benefit from being a long-term investor. I think that's probably the best way I could say it. Another question here about Alibaba's recent drop. I did retweet someone about this. I'll just quote that so I give you something new. It's just about how the overreaction to the news, because it wasn't as if Alibaba's news was all that bad, at least not the way that I read it. So let me see here. This comes from someone named, and I don't know this person, I'm not endorsing them, I retweeted them. Andrew B. AJ Button 2 is their name on Twitter. Says, did these people selling Alibaba even read the release? Earnings were down because new business investments, not poor operating performance. Operating income popped 10%. See what people commented saying. Yeah, someone says you are right, and the market's reaction is beyond ridiculous. Someone says that's why I bought. Thanks everybody for the opportunity. Someone says earnings don't matter anymore in the markets. Nothing really does. It's a complete crapshoot. People just hitting a button when they feel like it. Interesting. So, don't invest based on what I just read to you, but it's just interesting perspective. Okay. Valenti ASF says, what is your relationship to Charlie Munger? I'm just I'm just a lucky recipient of the knowledge. I don't have any formal relationship with him. I now know some people that know him, and one person in particular who's on a board with him. And I do intend to get him a letter or something like that. But I'm having some reluctance of doing that, not because it's not a cool thing, but just because, it's tough to explain this. When I was younger, I had a music blog that got really popular. And so I started to interview a lot of my favorite artists. I was, bringing them to my college to perform. I still have relationships in the music industry to this day. And something that can happen when you not love something but when you just have a passion for something, it's something that it brings you value. When you cross over into that world versus just being someone who's receiving the value, it can change the dynamic a little bit. And so Charlie Munger it's a very, I've gained a lot from learning through him and also just following the things he says to look into. Like if he talks about a certain book, like if I read that book, I often find something great in it. And that book might talk about something that leads me to something else. And so Charlie Munger's I'm very grateful that the internet exists the way it does now. And I was able to not only encounter his wisdom, but also, recognize it and act on it when I did. So this idea of I don't know, I almost don't want to I don't have the words for this. I just don't want to, how do I put it? I almost want to keep the world separate, but we'll see. I should just write the letter. Okay, Henry says, how high is capital gains tax in the United States? He heard something that Biden wanted to raise it to 40%. Capital gains tax depends on your income. So it's not just a universal number. It depends on what your income is. So, but it's a tax, right? And that's when I say it interrupts the compounding process. The longer you can go without having to realize your gains, then the longer that you have to, the longer your money has to compound, or I should say it again. I feel like I just butchered this. Your money can compound more forcefully when you don't realize that gain, because that unrealized gain rolls over. And so it's better to just pay the tax at the end after a long run than it would be if you're, every couple of years you're selling to buy something else. Okay, Kaj says, what is your opinion on the metaverse? Interesting. I had a conversation about this yesterday. So my thoughts on the metaverse, and I was reading Roblox 10K on the plane flight yesterday. Look, I think it's a thing. I think it's definitely, there's something there and that we should be aware of it. And I think Facebook it's pretty interesting how bold they're going with their, just endeavor to jump headfirst in. I do think what's funny to me is how everyone is now an expert on it. Like I noticed on Twitter, at least the people that I follow, everyone's talking about, how they're going to take advantage of it and all these different things. I like to think that I've seen a few of these things play out over my, 30 something years. And because since I was 20 years old, I've been hugely involved in, I guess what you'd call Web 2.0. So Web 3.0, there's a lot of room for it to evolve. I don't think that there's a lot of greenfield space. I think it's exciting. I think there will be opportunities there. I'm not so sure that now's the time to try to overinvest in, what those opportunities will be, because I think there's a lot of things to be figured out yet. I think there will be a lot of casualties that will come from people trying to, or who will overinvest in taking advantage of the metaverse, whether it's through some sort of company or service or even in a stock investment. And I think I'd rather be in the position to let them be the crash test dummies and then kind of step over them as we, get closer to what the reality of it will be. Now, as a human being, let me just say this. So that's the investing perspective or business perspective. As a human being, I'm not that pumped about it. And I'll say this because after a year or so of COVID in New York City, being locked down, isolated, living a far less social life than I ever would want to live, even with Zoom, I just think that we don't need more, escape into a digital fantasy land. That's just my human being perspective. I don't necessarily think that's adding a lot of value to society. The ability for you to feel me right now, the ability for you to reach out and touch my bald head, that is not the world is not screaming we need this. That to me is just again, a personal perspective. I think that there's a lot more opportunity for fulfillment in, I think these kind of interactions are awesome, but I'm not sure when is there diminishing returns as far as now you can we can sit at a virtual a virtual table and like give each other high fives. I'm not so sure of that as being like, yes, like where has this been my whole life versus things that could happen in the real world. Like, for example, I want to do a New York City meetup for CMQ. That to me would be much more meaningful and fulfilling than a metaverse room for CMQ. So just something I'm thinking of. I'm trying not to let the two get in the, I'm not trying to let my personal opinion get in the way of what I think is the investment opportunity, but just, I am not reluctant to embrace new technology. And usually I've got a good gut for what I think will resonate because I have marketed and market a lot of cutting edge technology for a living. I mean, it's a huge part of, what I do. And so I've got a good sense of what's going to work. And the metaverse, I'm just not that pumped about it. So it could just be me though. Lisa Van Meen says, I struggle with confidence. How are you so confident and eloquent? Well, first of all, thanks for saying that I'm eloquent. Confident. You know what? I don't want to, it's tough for me. I'm not great at analyzing. I'm not great at looking at myself in this way. Not that I can't be, I'm self-aware, but I'm not like, here's why I'm confident. My answer, I feel like, is probably just colored and like covered in a lot of just, I don't know. I just don't feel like I have a great answer for this. I can tell you this. I feel like I've earned my confidence. Like it's not like I was always confident in certain things. And I definitely wouldn't be confident talking to you about investing had I not put in the work. I think that's for me where I get most of my confidence from, is knowing that I put in the work. And what's helped me see that in myself is another passion of mine, which is boxing. A lot of my favorite fighters who you think are really arrogant or rather, I'll say who you think are very confident or just perfectly confident. They're confident because they know they put in more work than their opponent. A good example would be Floyd Mayweather Jr. I don't think there's many human beings that in their craft worked as hard as he did to be great and to stay great and to not just keep doing things the way he always did it, but to continue to adapt and change his style, switch up his public persona, whatever he had to do. But in terms of putting in the work, for me, that's where I get my confidence. The eloquent side, I think I was always, maybe it's genetic, and I'm not saying I'm eloquent, by the way, but maybe public speaking comes somewhat naturally to me, but it's something that I also had encouragement from early on to kind of like, whether it was, running for like student council in middle school and having to get on stage, I just sort of had to put my feet to the fire. But I definitely credit, I think there's some people that came before me in my lineage that were good at that too. So I don't want to give myself too much credit, but I do think that doing this kind of stuff, whether it's live or the podcast, it's like anything. It forces you to improve upon it. And anyway, I don't want to get too deep into my own thoughts on myself, but I hope that answers your question. And I'd say from the confidence standpoint, just whatever it is you want to be more confident in, put the work in and then go out there and test it. Actually get the experience to see that, in knowing that you're going to have times where your confidence is tested and you don't always pass the test when you realize, oh, I have more to learn. But for me, like when we were starting the podcast off about these quotes about Charlie Munger and active investing, I know I put the work in. I know what I'm talking about. And so it's not overconfidence, but it's certainly, I think that must be I think that's what you're sensing across the screen. This has been Compound Money Quietly, the CMQ Investing Podcast. If you enjoyed the episode, make sure you subscribe. Please share on social media. And remember what Charlie Munger says, the best thing a human being can do is help another human being know more. I hope this episode did that for you. And if that's the case, then help someone else know more by sharing it with them. My name is Chris Franco. Thank you for listening. We'll talk soon.